It's so hot out, but is the market cooling? We'll look into it next.
We're not going to do much comparing last year to this year because guess what happened in real estate at this time last year? Almost nothing. In May of this year, more listings were pending than any other May on record.
And keep in mind that our June housing report is a reflection of May's market activity. So while the numbers tell the story of a very hot market in May, there are some signs of the market cooling. And we're talking about going from scorching to slightly less scorching. If the market had been taken off like a rocket ship before, it's now taking off more like an airplane.
Arguably, something seems to have changed in the housing market psychology over the past month. Prospective buyers who find themselves in bidding wars might not even have noticed it yet, but there are signs that the market may be beginning to cool.
As now we're well into June, leading indicators of activity are now mostly cooling off instead of continuing to heat up. Adjusted for seasonality, home purchase applications have been falling since late March and are now 7% below the average levels in January and February of 2020. That's before the pandemic began to impact the market, despite low mortgage rates and easing access to credit.
The cooling market is also reflected in a 4-week decline in pending sales and a drop in demand, which is down 12% from its peak in late March. Overall, the data do not paint a picture of a bursting bubble, rather just a clear change from the overheated spring market.
With demand stabilizing, the housing market should become more balanced, allowing homebuyers to have a less stressful and challenging time finding and competing for a home.
For example, buyers may win bidding wars with offers that are $60,000 or less over asking price, whereas just a month ago in a similar situation, they might have had to go $100,000 or more over asking. This is all dependent on price point and location, of course.
Bidding wars are still the norm, but the number of competing offers have been cut in half. So listings that we're seeing 17 offers might only garner about 8 right now. Homebuyers still need to be strategically creative when submitting their highest and best offer, which involves methods like offering to cover appraisal gap up front, dropping the appraisal or mortgage contingency altogether, and adding escalation clauses.
Here's what we're seeing from working day in and day out with our homebuyers. In most cases, interest rates are still near 3%. Of course, it all depends on the loan type, credit score, debt, and the lender you work with. Low interest rates are allowing buyers to purchase more house right now. Inventory is slowly increasing, and we are seeing more and more homes hitting the market every week. As we mentioned, as buyer fatigue sets in and COVID restrictions lift, we are seeing less offers on homes than we were a couple of months ago, which is great news for buyers. We're seeing price reductions on listings with overzealous sellers that overprice their homes. What if you could buy a home closer to the asking price? Would this help get you off the fence? If you plan on waiting to buy, will you be able to afford a home next year if it's priced 10% higher and interest rates increase from where they are today? Once you're ready to make an offer, we have many tips and tricks to help make your offer stand out to win against multiple offers.
Things are starting to look up for residential real estate inventory. As the country continues to reopen, more houses are likely to be listed for sale. Locally, the count of active listings of homes for sale at the end of May was 44% higher than the end of last month. However, as long as buyer demand remains high, it will take time for the balance between supply and demand to truly neutralize.
Regarding existing home sales, a senior economic research analyst explains, in May, newly listed homes grew by 5.4% on a year-over-year basis compared to the earlier days of the COVID-19 pandemic last year. Also in May, the share of newly listed homes compared to active daily inventory hit a historical high of 44.4%, 15.1 percentage points above typical levels seen in 2017 to 2019. This is a reflection of quickly selling homes, and for buyers, it means that while they can expect new fresh listings every week, they will have to be prepared to move quickly on desirable homes.
As for newly built homes, builders are also confident about what's ahead for housing inventory. The chief economist at the National Association of Home Builders shares builder confidence in the market remains strong due to a lack of resale inventory, low mortgage interest rates, and a growing demographic of prospective home buyers.
Another indication of cooling, the average price of a home in the Denver metro area remains steady after reaching an all-time high last month. The average close price for a home was just above $620,000, up 26% year over year, but relatively unchanged from last month.
Year to date, this has been one of the busiest housing markets on record. At well over 23,000, the count of closed listings is higher than we've seen in any other January through May timeframe. The number of listings that have been in pending status are also at record highs, reaching more than 27,000 year to date.
This strong demand is fueling prices, which have been rising steadily throughout the year. Homes are moving from the active to pending status quickly, and the number of new listings hitting the market is still not keeping pace with the demand. As a result, inventory levels remain low. We only have 2 weeks of inventory, which remains unchanged from last month.
If you press pause on selling your house at any time over the past year, or you find yourself finally ready to make a move, don't miss out on this tremendous opportunity to sell. With record high prices and incredibly low inventory, this could be the best time for you to take action on your plans. Now more than ever, we understand everyone's situation is unique, so please give us a call to discuss how the current real estate market impacts you. We would love to hear from you.